UnitedHealth Group, UNH, is a global healthcare and insurance company operating through two main segments, UnitedHealthcare and Optum. The UnitedHealthcare segment focuses on providing health insurance and benefits to individuals, employers, and governments, including Medicare Advantage and Medicaid plans. The Optum segment provides a range of healthcare services, including pharmacy benefit management, Optum Rx, data analytics and technology, Optum Insight, and direct patient care, Optum Health. UNH is a dominant force in the U.S. healthcare industry, ranking as the largest health insurer by revenue. Its main competitors include the Cigna Group, CI, Elevance Health, ELV, and Humana, HUM. The company's management team is led by CEO Andrew Whitty, who has been steering the company through recent challenges and strategic shifts. Financial health. UNH's financial health is generally considered strong despite recent headwinds. The company's diversified business model has enabled it to maintain a solid position. Revenue and net income. In 2024, UNH reported over $400 billion in revenue and $15.24 billion in net income. Profit margins. The company's profitability has been under pressure, particularly in its Medicare Advantage, MA segment, due to increased healthcare utilization. Optum Health's operating margins have also been challenged, though the company generates strong cash flow. Debt to equity. UNH has an elevated leverage, with a debt-to-equity ratio of 45.6% as of the first half of 2025. This is a point of concern for some analysts, although the company has committed to a pause on share buybacks and debt issuance to deleverage. Cash flow and liquidity. The company is a robust cash generator, with an approximate 8% free cash flow yield, providing financial flexibility to invest in growth initiatives and maintain its dividend payments. Valuation metrics. P/E ratio, TTM. At 14.5x, UNH's P/E is considered expensive compared to some of its peers, e.g. Centene at 7.8x. However, it is a good value when compared to the broader U.S. healthcare industry average of 21.5x. Forward P/E. The forward P/E is an attractive 14.72x, suggesting that the stock is trading at a low multiple relative to its near-term earnings growth potential. P/B ratio and P/S ratio. UNH's price-to-book and price-to-sales ratios are consistent with its industry leadership position. EV/EBITDA. At 10.9x, this metric indicates a valuation that is in line with or slightly higher than its peers, reflecting its scale and diversified earnings streams. Relative valuation. While the company's P/E is higher than some competitors, its significant market share and diversified business model with high-margin Optum services justify a premium valuation. A discounted cash flow, DCF model analysis suggests the stock could be significantly undervalued. Growth potential. UNH's primary growth engine is its Optum division, which focuses on providing data-driven healthcare services. This segment is less exposed to the regulatory and claims-based volatility of the insurance business. While the Medicare Advantage segment faces short-term pressures, the company's long-term strategy focuses on value-based care, technology, and pharmacy services. The company's mission to make the health system work better positions it for continued expansion in an aging population. Risk factors are regulatory and legal risks. UNH faces significant regulatory scrutiny, including a criminal investigation by the U.S. Department of Justice into potential Medicare fraud. It has also faced lawsuits and fines for anti-competitive behavior and other practices. Medical cost inflation. The company has been hammered by surging medical expenses and increased utilization trends, leading to repeated downward revisions in earnings guidance. The medical care ratio, which measures claims costs as a percentage of premiums, has been rising, squeezing margins. Competition. While a market leader, UNH faces stiff competition from established players like Elevance and Humana, as well as potential disruption from new entrants and technological innovators. Dividends and returns. Dividend yield. UNH's dividend yield is approximately 2.76%, which is attractive for a stable, mature company. Dividend payout ratio. With a payout ratio around 36.54%, The company retains a significant portion of its earnings to reinvest in the business, indicating the dividend is safe and has room to grow. Dividend history. UNH has an impressive track record of increasing its dividend for 16 consecutive years, signaling financial stability. The company has also engaged in share buybacks, though these have been paused recently to support deleveraging. Market sentiment. Analyst ratings and price targets. The majority of analysts have a buy rating on UNH, with over 94% of ratings being a buy and the remainder being hold. The average price target is 401.63, suggesting a significant upside from current levels. Insider and institutional ownership. Insider buying, including a $25 million purchase by the CEO and a $5 million purchase by the CFO in recent months, is a strong bullish signal. Institutional ownership is high, with major firms like Vanguard and BlackRock holding large stakes. Technical analysis. UNH's stock is currently in a falling trend channel in the medium to long term, indicating negative investor sentiment. The stock has underperformed the broader market, trading below its downward sloping 200-day moving average. Key support is around $240, with resistance at $460. The technical outlook suggests that the stock is in a sustained downtrend, and a reversal would require a significant catalyst. Corporate governance. UNH's corporate governance policies are well defined, with a focus on board independence, ethical practices, and shareholder rights. The company has a detailed code of conduct and publishes reports on its political contributions. M&A activity. UNH has a long history of strategic acquisitions, using M&A as a core growth engine to build its diversified healthcare empire. Notable acquisitions include Pacificare, Catamaran RX, and Change Healthcare. The company's M&A strategy, particularly its focus on building the Optum platform, has been highly successful. However, its recent history has been marked by heightened antitrust scrutiny from the Department of Justice, which has challenged deals like the proposed acquisition of Amedisys. This signals rising regulatory risks associated with its scale. ESG, sustainability. UNH has a low ESG risk rating, according to Sustainalytics, indicating its exposure to material ESG issues is low, and its management of these risks is strong. The company ranks favorably against many of its competitors in this area. Insider and institutional data. Insider buying from key executives is a positive signal. Large institutional ownership, primarily from passive index funds, suggests that the stock is considered a stable, core holding for many major investors. Innovation and moat. UNH's competitive moat is based on its scale, vertical integration, and data-driven capabilities. The Optum division in particular leverages technology, data analytics, and artificial intelligence to streamline healthcare processes, create efficiencies, and simplify the patient experience. This tech-enabled approach to healthcare gives it a significant advantage over traditional insurance companies. Cyclicality. The healthcare industry is generally considered defensive and less cyclical than other sectors. However, UNH is not immune to economic downturns. During a recession, people might opt for lower-cost health plans or lose their employer-sponsored coverage, which can impact revenue and margins. Additionally, medical cost trends are a constant variable that can impact profitability. This video provides an analysis of recent insider buying activity at UnitedHealth Group, which can be a valuable indicator for investors.